Trump media says it's raising $2.5 billion from institutional investors to buy Bitcoin. The deal includes $1.5 billion in stock and $1 billion in convertible notes. Now, Bitcoin will be a key treasury asset held with Anchorage Digital and Crypto.com. The announcement comes as Bitcoin hit new record highs last week and the big Bitcoin 2025 conference rages on in Las Vegas. Now, separately, stablecoins in the spotlight amid expectations for regulatory clarity, and the Wall Street Journal reporting that U.S. banks are exploring a joint stablecoin venture. Joining me to weigh in this morning is William Quigley, Tether and Worldwide Asset Exchange co-founder. William, good morning. Thank you so much for joining me. So first and foremost, if Trump media makes a multi-billion-dollar Bitcoin buy, how big of a signal is this for crypto, and what does it actually mean for their broader strategy, whether we're talking about funds, stablecoins, or exchanges?
Well, I would say it's very impressive anytime any company can raise $2.5 billion, particularly a company that is at its stage, right? It's a very nascent company at this moment, less than $5 million in annual revenue. The idea behind it, I think, makes a lot of sense because the Trump Media Group is really being organized as a crypto holding company. They intend to have things like stablecoins, ETFs, maybe their own utility token, and having a Bitcoin reserve probably makes sense because so many other companies are starting to add crypto into their treasury. And I think a lot of the people who hold the Trump Media Group stock are also people who like crypto. So from this perspective, I think it's consistent with what they want to be.
And while I have you here, I do want to ask you about stablecoins, which have been getting a lot of attention. And Tether is the first stablecoin. There are different types of stablecoins that exist out there. So what is your definition, first and foremost, of a stablecoin? And give us your take when it comes to things such as AML or KYC.
Sure, I'm glad you asked me that question. From my perspective, and I think this would be most crypto people, a stablecoin is a tokenized fiat. So it represents some quantity of fiat currency, and it's tokenized, meaning it can be moved, transferred on a blockchain. So if you assume it has to be tokenizing fiat and it has to be blockchain compatible, those two things would make it, in my opinion, a stable coin. Whether or not the proposed stable coin that the banking consortium, including JP Morgan, B of A, Wells Fargo, are thinking of doing, whether or not that will be on a blockchain, I don't know. So I would say I'm a little reluctant to say what they're doing is a stable coin. I'd prefer to see a little bit more detail from them on how they intend to use it and how it's going to be built.
And I'm glad that you brought that up because there has been a lot of focus on that Wall Street Journal report about the consortium of banks. But I do want to focus on regulatory clarity here since we're limited for time. The Senate voted 66-32 on May 19th to advance the Genius Act, a bill that would create rules for stablecoin issuers. And it does clear a major hurdle on the way to final passage.
Yep.
But what are you hoping for when it comes to legislation?
Well, by the way, I would say the one thing that legislation doesn't include, the Genius Act legislation just passed by the U.S. Senate around stablecoins, is the need for it to be on a blockchain. So, we may start to drift away from what a traditional stablecoin was. But as far as regulatory clarity, it's a good step. The Genius Act indicates what sort of controls you have to have in place, what kind of institutions can issue a stablecoin. It specifies that where stablecoin deposits would be ranked in terms of bankruptcy proceedings, which is very helpful. How the regulations around money laundering and know your customer processes should be put in place. I'd say it's a good first step. It's really the first piece of clarity we've seen from the US Congress in over 15 years since Bitcoin was created. So it's been a long time coming. I would hope from this point we would then get into the other areas of crypto, like DeFi, certainly around the other types of coins other than Bitcoin. There's many of them. How exchanges should trade them, and so forth. And then ultimately the tokenization of real world assets, which is going to be an enormous area, and maybe in the next 10 years, where you'll be able to more freely trade virtually all assets using blockchains.
And William, finally, before I let you go, you've invested in over 30 crypto as well as blockchain projects, and you've also helped develop the first ETH derivative used before its official launch. So big picture here, what are you watching in the second half of 2025 when it comes to the crypto landscape?
Yeah, well, historically, after the Bitcoin halving event, and this happened in April 2024, historically, about a year and a half or so from that point, Bitcoin would be on an uptick and doubling, tripling, quadrupling. We've seen modest gains relative to prior Bitcoin halving bull markets. And the market should have taken off already, I would have said, if we were following old patterns. So at this point, I think we're in a new pattern, and that means we don't necessarily know what's going to happen. There is a lot of accumulation of Bitcoin by large financial institutions and now corporations, as I mentioned, adding it to their treasury, which should keep Bitcoin price stable. But whether it can do a run like it's done in 2017 or 2021, where it went up many multiples, it remains to be seen.
Okay, William, always great having you on the show. Thank you so much for taking the time to join us. And as always, thank you so much for sharing your insights and your perspective.
Nice seeing you. Goodbye.